You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 24th of September, 2018. As the week ended, we saw everything down on Friday. Our book is available. You can find the links in the show notes to purchase the book. We've also, at the end of this video, downloaded a number of trainings for you that you can click on and take. You're going to find interesting stuff there, both introduction to how we chart the market, and you'll find interesting trainings on the Heikin-Ashi candlesticks, the price percent oscillator, and a surprise for you. Don't forget, at the end of this month, at the end of September, we're going to have another training on our special quarterly chart, which is magical if you're interested in long-term wealth creation. This chart is what you want to see. We go back 20 years, and you can see how this chart would have gotten you into and out of the market at wonderful times, the Trump effect, and we'll be exploring what the latest candle looks like for you. So again, prepare for that training. You need to be a subscriber. Go to chartingwealth.com and subscribe for free, and you'll be on the list to receive that training with us. Okay, now let's go ahead and go to our weekly chart. And we're going to jump into the S&P 500. Even though it was down for the day on Friday, it was a green up candle for the week. Price movement well above the weekly trend line. Price percent oscillator heading up. Derivative oscillator still losing some energy, but an up week for the market. Now, what does that translate into? Well, the two-day chart still in a confirmed down move, even though this latest candle finished drawing on Friday. A big up candle, still wasn't enough energy to cross over going up. So we don't have a trade. Remember, our main method of getting into trades, we have two. The first is the one that we're looking at right now, where we're waiting for both the two-day and the weekly to be moving in the same direction. They're not doing that. So we can't get into a trade at this point. It's still too uncertain. We're trend followers. So we go from, and again, we see that the down movement on the derivative oscillator is losing energy, and the price percent oscillator is heading up. We don't have a crossover yet. We go to the 4-hour chart. What do we see? We actually see things backing off after a prior good up day on Thursday. On Friday, started off weak. It got weaker. And again, heading toward a crossing over, going down on that 4-hour chart. So we'll just continue to watch and see what we see when things shape up and we have a trade. We will look to get into a trade, but we don't force a trade. Why? Because the market will always kill you. The Qs, that is Q, Q, Q. What do we have going on here? We actually have, at the end of the day, a crossover going down, a weekly vertical crossover. So we will call that. It is the first one in a long time, all the way back to May. We finally seen the Qs lose some energy and actually crossover going down. Now, this is a big deal. This is our second way of getting into trades, and we do that by having a weekly vertical crossover going down, which has occurred. And then we're going to look to get into a down move in the market on Monday if it presents itself. Those of you who have our book, I do encourage you to go to that chapter, to our two main trading methods. Read that again. Those of you just listening, we're also going to put on the end of the program for you the training that we have on the weekly vertical crossover. We've actually got two of those. We're going to load the second one up this go round, but you can find both of them at chartingwealth.com. So you'll understand this method of getting into trades. Now again, it may offer itself on Monday. It may not. Check the market at 10:30. If you want to stay with the 4-hour charts, check it at noon. Okay, enough said on that. We'll go now again, the derivative oscillator is still positive, but hopefully that'll flip over as the week progresses. We like to see both the price percent oscillator and derivative to flip over at the same time. Two-day chart's still negative, although we do have a green up candle, so a little bit of trepidation and concern. We'll see how things shape up on Monday. Derivative oscillator still heading down, price percent oscillator pretty much flat. We go to the 4-hour chart, and what do we see going on there? We see on that 4-hour chart up in the morning, and then a spinning top means indecision tending down in the afternoon. Derivative oscillator still positive, and the price percent oscillator still positive. So we would like to see those crossover going down. and perhaps they will. So we'll continue to monitor things as the week develops. So we go from the weekly to, we go from the Qs from both our stocks, looking at the S&P and the Qs, to TLT, 20-year bonds. What do we see going on there? Well, we're in our third week of strong down movement. Remember, we had a weekly vertical crossover going down back on the week ending the 14th of September. And now we have another week of strong down movement. We had a jumping in point on that down move, and things continue to move down. Not down all that much on Friday, 0.04%, but down nonetheless. And we see the derivative oscillator gaining downward momentum and the price percent oscillator heading down quite nicely on the weekly. We go to the 2-day, and of course, we've got another 2-day candle heading down, derivative oscillator gaining downward momentum, price percent oscillator heading down nicely. And we look at that 4-hour chart, what do we see? It's really sliding sideways, again, down for the day. Keep an eye on that 4-hour chart. We had some nice down movement. We want to see if the market's just sort of relaxing after that down move, and it'll continue. Derivative oscillators losing downward momentum, so do pay attention to that. If it crosses over going up, you can, of course, take your profit in that trade, but we'll see how the week starts off and just how things look. So we go from the 4-hour on TLT. Lastly, we go to gold. Gold down the most, 0.68% for the day, but that didn't mean that we didn't end up the week with a green spinning top. Price movement above that 2-day trend line. So again, just a big sideways slide in gold. We hope gold is bottoming out. If the derivative oscillator keeps losing downward momentum, maybe over the course of this next week, the price percent oscillator will cross over and we'll have a weekly vertical crossover going up on gold. We shall see. Haven't seen that yet. We go from the weekly to the 2-day. What do we see there? Well, ended with a red spinning top. That means indecision tending down. Price movement is above that 2-day trend line. Derivative oscillator is losing momentum at this point. So again, we're just waiting for gold to settle out and give us the potential of a trade. We go to the 4-hour chart. What do we see? Big down movement in the morning, bit of an up movement in the afternoon, but we did get a crossover going down in gold on that 4-hour chart. So we'll just continue to watch. Hopefully gold is bottoming out. It's sort of finding its bottom here and it'll head up, but we'll let the market lead us and tell us what to do. Folks, that's where we are as we end the day on Friday and go into this next week. And again, the alert is weekly vertical crossover going down on the Qs. That is the Nasdaq 100. We'll be looking at those charts on Monday morning to see if we have a jumping in point to ride that down wave. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.